You walk into a car dealership. You are there to buy a work truck for your business. You have the revenue. You have the contract signed with your clients. You are feeling good. You sit down with the finance manager. You hand him your driver's license and you say, "I want to put this under the business name." He smiles, types away on his keyboard, and then his face changes. He looks up at you, a little confused, and says, "I'm sorry. The system instantly declined the business application. We're going to have to run your personal credit and put this in your name if you want to drive off today." You freeze. You know your personal credit is perfect. You know your business makes money. So what happened? Why did the computer say no before the guy even hit enter? It wasn't a glitch. It wasn't a mistake. It was the invisible score. While you have spent your entire adult life obsessing over your FICO score, watching it like a hawk on Credit Karma, celebrating when it hits 750 or 800, there has been a second report being built in the shadows. A report that you probably have never seen. A report that most business owners don't even know exists until they get denied for a loan they desperately need. My name is Conrad, and welcome to Wealth Architecture. Today, we are pulling back the curtain on the credit bureaus that actually matter for your business. We are going to stop playing the game of consumers and start playing the game of corporations. I'm going to introduce you to the big three of the business world: Dun & Bradstreet, Experian Business, and Equifax Business. I'm going to explain exactly how the Paydex score and the Intelliscore are calculated. And most importantly, I am going to give you the exact blueprint, the specific vendors and the specific timeline, to take a brand new LLC with zero history and build a pristine, high-power credit profile in just 30 days. This is the knowledge that separates the small-time hustler from the true wealth architect. If you are ready to make your business stand on its own 2 feet, let's get to work. We have to start by understanding the landscape. In the United States, we live in a dual financial system. On one side, you have the consumer system. This is where 99% of the population lives. It is governed by your Social Security number. It is tracked by FICO. The goal of this system is to measure how good you are at being a consumer, how good you are at paying for the house you live in and the car you drive to work. On the other side, you have the commercial system. This is where the Fortune 500 lives. This is where the real estate tycoons live. It is governed by your EIN, your employer identification number, and it is tracked not by FICO, but by a set of algorithms that are completely foreign to most people. The biggest mistake I see entrepreneurs make is assuming these two worlds operate by the same physics. They don't. In the personal world, if you have no credit, you start with a blank score, or maybe a low score. In the business world, if you have no credit, you are considered high risk. You are essentially a ghost, and banks do not lend money to ghosts. So, who is tracking you? The grandfather of them all is a company called Dun & Bradstreet. If you take nothing else away from this video, remember that name, Dun & Bradstreet, or D&B. They have been around since the 1800s. 4 American presidents actually worked for Dun & Bradstreet as reporters before they were presidents. That is how deep this institution goes. They hold the Data Universal Numbering System identifier, known as the DUNS number. This is the Social Security number of your business. If you do not have a DUNS number, your business does not exist in the credit world. You could be making $10 million a year in revenue, but if you don't have a DUNS number, to a commercial lender, you are invisible. Now, D&B produces a score called the Paydex. Everyone knows FICO ranges from 300 to 850. It's a complicated algorithm. It looks at your credit utilization, the average age of your accounts, your mix of credit, hard inquiries, and payment history. If you pay off a loan, your score might drop. If you use too much of your limit, your score drops. It is sensitive. It is emotional. The Paydex score is different. It is brutally simple. It ranges from 0 to 100, and it measures one thing and one thing only: the speed of your payment. This is critical to understand. FICO cares about how much debt you have. Paydex does not care if you owe $5 or $5 million. It only cares about when you send the check. If you pay your bill exactly on the due date, you get a score of 80. In the business world, an 80 Paydex is the gold standard. It is equivalent to having a 750 personal credit score. It opens doors. But here is the insider secret. You can get a score higher than 80. You can get a 90 or even a perfect 100. How? By paying early. If your invoice says Net-30, meaning payment is due in 30 days, and you pay it in 20 days, you might get an 80. If you pay it in 10 days, you might get a 90. If you pay it practically the moment the invoice hits your inbox, you get a 100. This is the hack. In the personal world, paying your mortgage 2 weeks early doesn't boost your score extra points. In the business world, paying your vendor invoices early is the fastest way to manipulate the algorithm in your favor. But D&B isn't the only player. We also have to talk about the sophisticated younger brother, Experian Business. Experian uses a score called the Intelliscore Plus. While Paydex is simple, Intelliscore is smart. It is an AI-driven model that ranges from 0 to 100, but it is predictive. It is trying to predict the likelihood that your business will go more than 90 days delinquent in the next 12 months. The Intelliscore looks at more than just, did you pay? It looks at trends. Is your debt load increasing or decreasing? Are you applying for credit all over town desperately? It even looks at industry risk. If you are in trucking or construction, your starting ceiling might be lower than if you are in medical software. And finally, there is Equifax Business. They focus heavily on banking data. They are looking at your small business financial exchange data, essentially how you handle your business bank accounts and loans. So, now that we know the players, Paydex and Intelliscore, how do we master them? How do we go from invisible to invincible? Here is the problem. This is what we call the credit paradox. You need a Paydex score to get business credit cards, but you need business credit references to generate a Paydex score. It feels like a trap. You go to apply for a card, they deny you because you have no file. You try to build a file, but nobody will give you credit. How do we break this cycle? We break it with vendor credit, also known in the industry as Net-30 accounts. This is the bread and butter of the wealth architect strategy. A Net-30 account is a trade line where a supplier gives you goods now, and you pay for them in 30 days. The key, and this is where most people mess up, is finding vendors that will approve a brand new LLC with no history, and who will actually report that payment data to Dun & Bradstreet and Experian. Most vendors do not report. If you have an account with a local lumberyard or a local marketing agency, they probably don't report to the bureaus. You are building trust with them, but you are not building credit. We need reporting trade lines. I am going to give you the starter pack. These are the specific vendors that are known in 2026 to approve almost anyone with a pulse and an EIN, and who report reliably to the bureaus. Number 1 is Uline, U-L-I-N-E. They are a massive shipping supply company. They sell boxes, tape, shelving, janitorial supplies. You might be thinking, Conrad, I run a consulting firm, I don't need boxes. I don't care. You need a credit score. Go to Uline, create an account, order some cleaning supplies for your office, order some pens, order some shipping tape. Get your cart total to about $50 or $70. When you go to checkout, select Bill Me or Invoice Me. Because you are a new business, sometimes they might ask you to prepay the first order. That's okay. Do it. But the goal is to get that Net-30 invoice. Once you get the invoice, pay it immediately. Number 2 is Grainger. They are an industrial supply giant. They sell tools, safety gear, flashlights, batteries. Same strategy. Go buy a toolkit. Buy a first aid kit for the car. Buy a heavy-duty flashlight. Select Invoice Me. Number 3 is Quill. Office supplies. Paper, ink, coffee, snacks. Every business needs coffee. Quill is famous in the business credit community because they report very quickly. Number 4, a company called CEO Creative. They sell custom-branded merchandise and electronics. They are specifically set up to help small businesses build credit. Number 5, Summa Office Supplies. Another great Tier 1 vendor. Here is the 30-day Blitz strategy. Day 1. Ensure your foundation is set. You have your LLC, you have your EIN, you have your DUNS number, which you got for free from the D&B website. Do not pay for it. You have a professional phone number listed with 411. You have a business website. Day 2 through day 5. You go to Uline, Grainger, Quill, CEO Creative, and Summa. You open accounts with all of them. You place an order of at least $50 with each of them. Why $50? Because some algorithms ignore purchases under that amount. We want to make sure the data sticks. You select Invoice Me. If one of them denies the invoice option and asks for a credit card, just move to the next one or prepay one order to build trust, then request terms on the second order. Day 10. The boxes and supplies start arriving at your office. You have your flashlights, your toilet paper, your shipping tape. But more importantly, you have the invoices. Physical or digital pieces of paper that say, amount due in 30 days. Day 11. You log into your business bank account and you pay every single one of those invoices in full. Do not wait. Do not float the cash. Remember the Paydex algorithm: speed is power. By paying 20 days early, you are signaling to the computer that your business is flush with cash and highly responsible. Day 15 through day 30, you wait. This is the hardest part. You are waiting for the reporting cycle. These vendors usually report their data to Dun & Bradstreet once a month. You need at least 3 trade lines reporting to generate a Paydex score. Ideally, we want 5. That is why we applied for 5 vendors. It gives us redundancy. By day 35 or day 40, you will get an alert. You can monitor this using free tools like nav.com or paid tools like Credit Suite or even the D&B iUpdate portal. You will see a notification: new score generated. You check the dashboard: Paydex, 80, Intelliscore, low risk. Just like that, you are no longer a ghost. You are a business with a track record. You have established that you can borrow money and pay it back. To the algorithm, you are now more trustworthy than a business that has been open for 5 years but has never used credit. Now I want to address the skeptics. I can hear some of you saying, "Conrad, this sounds silly. Buying toilet paper to get a loan? Why can't I just use my personal credit?" You can. But you are building a glass ceiling over your head. Personal credit is finite. If you put $30,000 of business expenses on your personal Amex, your utilization spikes. Your personal score drops. When you go to buy a house, the bank counts that debt against your debt-to-income ratio. Business credit is infinite. When you build a Paydex score, you unlock the ability to get no personal guarantee funding. That means you can get a fleet of vehicles for your business without them showing up on your personal credit report. You can get a $50,000 line of credit from Chase or Bank of America based on your business profile. You can get real estate loans that are underwritten based on the property's income, not your personal W-2. But you cannot get there without the foundation. The Net-30 accounts are the foundation. They are the bricks. Let's talk about the next level, Tier 2. Once you have that 80 Paydex score from the toilet paper phase, you graduate. You stop buying boxes and you start applying for store credit. This is where the Intelliscore starts to matter more. With an 80 Paydex, you can walk into or click onto Amazon Business. Not the consumer Amazon, Amazon Business. You can apply for a pay-by-invoice line of credit. With a solid Paydex, they might give you a $5,000 or $10,000 limit instantly. No social security number required for a guarantee, just the EIN. You can go to Dell. Need new laptops for the team? Apply for Dell Business Credit. Because they see the Uline and Granger payment history, they trust you. They give you $15,000 to buy computers. You can go to Home Depot or Lowe's if you are in real estate. The Commercial Pro accounts. Again, approval based on the business score, not the personal score. Do you see the progression? We started with $50 orders of tape. Now we are at $10,000 orders of electronics, and we are still only 60 to 90 days into the process. Now let's talk about the pitfalls, because there are traps in this jungle that can ruin your Paydex score faster than you built it. Trap number 1, inconsistency. The Paydex score has a short memory. It is weighted heavily toward recent activity. If you do the Blitz in month 1, and then you never buy anything again, your score will stagnate or disappear. You need to keep the heartbeat alive. Set up a recurring order. Have Quill send you coffee every month. Have Uline send you cleaning supplies every quarter. You need fresh data hitting the file every single month. A dead file is almost as bad as an empty file. Trap number 2, the mixed file. This is a technical nightmare. Sometimes D&B or Experian will confuse your business with another business that has a similar name. If your company is Summit Consulting LLC in Austin, Texas, and there is a Summit Consulting Inc. in Dallas that just went bankrupt, the algorithm might merge your files. Suddenly, your perfect 80 score drops to a 20 because of someone else's mistake. This happens more often than you think. That is why you must claim your profile. Go to the D&B website, search for your company, and claim the listing. Monitor it. If you see a trade line that isn't yours, dispute it immediately. In the personal world, you check your credit once a year. In the business world, you check it once a month. Trap number 3, the address change. Business credit bureaus rely heavily on stability. If you change your business address, phone number, and bank account every 6 months, your Intelliscore will crash. It signals stability risk. Pick a commercial address and stick with it. If you move, update it everywhere. Secretary of State, IRS, D&B, and all your vendors simultaneously. Let's go deeper into the Intelliscore because as you grow, this becomes more important than Paydex. Experian's Intelliscore is looking for signs of stress. One of the biggest red flags for Intelliscore is rising utilization. In business credit, we don't always have hard limits like on a personal card, but they track your highest credit extended. If your highest credit extended is $1,000 and you owe $900, you look maxed out. To hack the Intelliscore, you want to artificially increase your high credit limits. How do you do this? Once a year, make a large purchase with a vendor and pay it off immediately. Buy $2,000 worth of equipment from Dell, even if you don't strictly need it right now, or resell it. Why? Because now your report shows high credit, $2,000. Next month, when your balance is $100, your utilization looks tiny. You are architecting the data. You are painting a picture for the algorithm that says, this business handles large volume effortlessly. I want to pause and talk about the psychology of this. Why do the banks make it this way? Why is it a secret? It's not a conspiracy, it's a filter. The banking system is designed to filter out the uncommitted. If you are not willing to figure out how to get a DUNS number, if you are not organized enough to pay a Uline invoice on time, you are definitely not ready to manage a $1 million commercial loan. The invisible score is an IQ test for entrepreneurs. It tests your organization, your diligence, and your understanding of systems. When you master the Paydex and Intelliscore, you change the way you negotiate. When you walk into that car dealership to buy the truck and the finance manager asks for your info, you give him your EIN. He runs it. Instead of a decline, he sees an 80 Paydex. He sees a low-risk Intelliscore. He sees trade lines with high limits. He comes back with a smile and says, "We can do this with zero down at a preferred corporate rate." And the best part? That loan never appears on your personal credit report. If the business hits a rough patch, your personal FICO is safe. Your family is safe. This is the power of the corporate veil. It starts with a box of paper clips. It ends with financial sovereignty. So here is your homework. If you have an LLC, go check your status today. Go to the Dun & Bradstreet website. Search for your company. See if you exist. If you don't, get your DUNS number. Then, open 3 Net-30 accounts this week. Uline, Granger, Quill. Buy something you need. Pay the bill the day it arrives. Do not let your business be a ghost. Ghosts don't build wealth. Architects do. Build the profile, master the invisible score, and watch how much easier the game of money becomes when you are playing by the big boy rules. If you found value in this deep dive, do me a favor. Like the video. It helps the algorithm find other entrepreneurs who are struggling in the dark. And subscribe to Wealth Architecture. We are just getting started. In the next video, I'm going to show you how to take this business credit profile we just built and leverage it to get actual cash funding, MasterCards and Visas with $50,000 limits. You don't want to miss that. I'm Conrad. Build it strong. I'll see you at the top.